day.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code. But let's have a look at the S&P 500, currently trading at around 3,880. Today is a very big day due to the fact we have the FOMC meeting and of course the Jerome Powell's conference. We are expected to see 0.75 basis point hike. There is a 20% chance that we could get the full 100 basis point hike, so the full point. However, that is very unlikely. I think there's more of I think it's about a 76% chance of getting a 0.75 basis point hike. So that's the number that I'm looking for. But of course, it all depends on the conference. And as well as that, we also have the dot chart. Now, for those who do not know what the dot chart is, it's basically every Fed member kind of puts it kind of just basically shows where they believe interest rates are going to be within the next 2 to 3 years. So it's very interesting to see because, of course, when we get the interest rate number, which of course, let's say it will be 0.75 basis points, that's a collective a collective decision from the Fed. But the dot chart, as individuals, they get to place where they believe interest rates should be within the next 2 to 3 years. So that can always be a market mover. Again, we're expecting the Fed to be super hawkish, and I think that, naturally the risk is still that towards the downside here. I think that we could potentially go and test the June 16th lows, which is down at around 3,650. But that being said, as I mentioned yesterday, there is still the possibility that we may have a surprise rip towards the upside. And that's due to the fact sentiment is so bearish. Every single investor and trader that I'm talking to or hearing from at this moment in time are all just sounding super, super bearish. And typically you do tend to find that when sentiment is as bearish as what it is right now, you can start to see nice rallies in the market. So if the Fed did come out and say something dovish, and of course that's going to catch a lot of people off guard, and right now I think there's $108 billion worth in S&P 500 shorts. So if there was a dovish comment, then of course a lot of these hedge funds and money management firms are going to have to come out and hedge their short positions, which of course could create a short squeeze, and that could be an almighty rally towards the upside. But going into the meeting today, I fully anticipate the market to slide towards the downside. That's probably my highest probability. But what I am trying to say is that there is still a possibility that we could go higher. So it's going to be very interesting today, and I look forward to updating you all tomorrow. And of course, I'll be posting my NASDAQ 100 video later on. So if you want to get my perspective closer to the time, then make sure you tune in for that video.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.